Hi there, and welcome back to another episode of Let's Talk Real Estate Investing. I'm your host, Sharon Vornholt, and I'm so happy you're tuning in today. My guest is Nathan Brooks. Nathan is the co-founder of Bridge Turnkey Investments. Bridge is a home builder in Kansas City, Missouri that is one of the top producing turnkey rental providers in the nation. He's an accomplished investor, a speaker, a content creator, which you know I love, and a real estate coach. Nathan also has written a book called The No Quitter's Guide to Investing in Real Estate. And he's also branched out into some bigger and better things, which we'll hit on today too. So welcome to the show, Nathan.
Thank you, Sharon. I appreciate you having me on here.
Well, I'm always interested to talk to people and see how they got started in real estate and which strategy they started with, because it's so interesting to see where they started and what the path was then. So let's dive into how you got started.
Absolutely. Well, I literally grew up and went through college as a professional musician. So really the dynamic between my Bachelor of Arts in Humanities and years of college, professional music training to be a real estate investor doesn't usually necessarily equate. But I, like a lot of people, heard the Rich Dad Poor Dad, about it, read the book, did some of their training and got the bug. And so I was literally sitting in a booth eating lunch and overheard a guy talking about real estate and went and chatted him up like I do everyone, and ended up in quote unquote in business with this person for and first day I bought a house, I bought two, like 4 weeks later. So to say it went poorly would be an understatement, but that was the beginning.
Did you start with single family homes?
Yep. I started with single family, and probably the first, probably the first few hundred houses I bought and sold were in the single family space. Done some small multifamily stuff. And over the last, maybe 2 years have really been more involved in the larger development, both horizontal and vertical stuff. Okay.
That's interesting. So you did more buy the home and renovate it in the beginning rather than building new things. I know a couple people that do turnkeys, but they do ground up builds for rentals. So, but you did it more the traditional way.
Yeah, we did the traditional way. And then, over the last few years, we've definitely done more of the new construction model, and built to rent, both to investor exit as well as to a retail exit. But, in our market anyway, it was harder and harder to make those numbers work from a new construction standpoint. And so we are more focused on a retail exit versus a, investor exit.
Okay. So your original strategy then was fix and flip to retail buyers.
So we started with the goal of in 2015, I met my partner, David, and we started our company Bridge, and our intention was to hold some and sell some. And all of a sudden we realized there was such a demand on that investor side to, somebody on the East Coast, West Coast, Texas, whatever, that, made money, but they didn't want to buy in their market. And so we started buying, renovating, and selling homes for investors, around 2016. And so over the course of that time, almost all of those deals we did went to investors. And, at one point we're, buying 15, 20, buying and selling 15 or 20 houses a month in that way. So yeah, we had a big organization and a lot of time and effort, both in acquisitions, renovations, and then sales to investors.
Okay. So you sold to investors as the turnkey model then?
Exactly. Yep.
Okay. What about, people always ask about financing. So did they need to just go get a traditional mortgage, or did they need cash, or did you owner finance? What about the financing end of this?
Yep. Great question. So the people that were first starting out, we would just have them do that, Fannie Freddie loan, typically to put 20% down. Some people had, more cash. They want to put a little bit more down. We also had some people who are pretty high net worth folks. And so, one was a professional football player. You get stroked, a couple $1 million over a very short period of time. Did you know, by the way, Sharon, that if you play in the NFL, if you play 17 games, you get 17 checks or whatever, you basically get paid all your salary over that time. So, that the people that really save their money and put it into assets. So anyway, from a financing perspective, we would partner with a couple banks that were here locally, but that were national lenders. And that has worked the best for, say, the first 1 to 5, 6, 7 properties. Typically after property number 5, the debt coverage and the cash in the bank became significant enough, it could make an impact for some of those investors. And so we would transition our clients with multiple homes into a commercial lending product where it'd be, 25-year AM, 5-year fixed, 7-year fixed, and then a reset or balloon or whatever. So.
But you helped them with all of this. So you educated them and led them, not to say you said you have to use this, but you had, because they often don't know about financing. How do I finance the deal? And that's always seemed to me like a big part of their education with turnkey rentals is, here are your options. And these are some things that we know that will work for you.
Yeah. And eventually we actually did make them use our lenders, because we'd work with enough lenders who might, be great at whatever the thing was that they were experienced at doing. But when they came into our market and appraisers and what was happening, it was much more complicated to get those done. And some people just weren't very good. Right. So we identified, hey, here's 3 lenders. Here's an inspector that we trust. And by the way, here, we're going to give you an inspection. We're going to give you, the appraisal that was ordered. We're going to repair anything that came up on the report and so forth. So those were all things that were built into our process.
I love that, because long time ago, actually when I first started, I had a home inspection company. I owned a home inspection company for 17 years. And I started investing about halfway through being in that business. And we used to try to get people, and we had some success with that, but to do pre-sale home inspections, get the inspection, fix everything. And then instead of them wanting this $500 thing to $2,000 off the sales price for a $500 thing, you've already fixed the thing. Or you can also say, people would say, if this was like a retail sale, maybe the roof has only got 3 years, they're going to want a new roof. And we would say, well, if you either fix that in the price of your house or say no. You've got a choice here, but you've disclosed it and they know what they're buying. So I'm impressed that you did that. And then you gave them the appraisal. That was the question I was going to ask you. So you did all of these things so they knew exactly what they were buying.
Yep, exactly. And in the inspection report too, we'd literally lay out, like, here's the inspection, here's everything that came up, here's what we did about it, here's a picture of what we did about it, and it's done. And then that way it was, to our best, possible way that we could create the best experience and the best product for that client.
That is such a smart idea. Now, when it comes to tenants, did you all place the tenant in there, or were they responsible for that? We work with a third party property management company. So we would, in our process, 30 days out, we would go hand that property off to the property management company. And then, within ours, we would just have a period of time that we would say, hey, if the tenant's not placed by this period of time, we'd cover, a certain amount of rent for that person. But, I also say it's tricky sometimes, especially in like the late fall and winter section when it's a shorter period of or it takes longer to get a tenant in place. So there's certainly things I would do differently, going into that in future, because it's also easy to set up someone to believe that a turnkey property means that it never has any issues, and all those issues are my responsibility. So, it's important for people when they invest into properties to realize, like, it's still a house. It still has things that'll happen. Tenants do stuff to the house.
so that was something that was a learning experience for me too.
Mm-hmm. Yeah, property management is not an easy thing. Both my daughters are property managers. One manages large multifamilies, and the other one manages a large portfolio of single family, mixed use, commercial, restaurants, apartments, everything. It is a definite skill set, and it's not a job that most people like. I hated being a landlord when I was, for my properties. I wasn't good at it. I gave too many second chances, and I was miserable, quite frankly, the entire time. It's not what I like to do. I'm more on the creative side. But if you can find a good property manager, then they're worth their weight in gold.
I could not agree more. Both on the job itself, which is wild, since your daughters are both property managers, is pretty crazy. And also, we built a pretty fairly large property management company, but in truth, I hated it too. And I own lots of real estate now, but I don't self-manage anything. We don't have anything in-house. I have either partners that have property management, or we hand it out to third-party property management.
That's interesting. So we're both in agreement on that one.
100%.
Now, when you were buying properties for turnkeys, how did you evaluate the property classes, and did you have an average priced home or an average type of home, neighborhoods? How did you do that?
We mostly focused just in areas we knew were, hey, we could have a solid rents, and we looked at the crime statistics and make sure, hey, like, can we get good area, good house. It doesn't have to be anything fancy. We don't want, we want an average price house in a average or above average neighborhood. So it wasn't, we had a much more specific buy box, and, with my acquisitions team, we had literally a lot of different details. And by the way, if you're out there buying any level of real estate, you should have a buy box of what you're buying, even if it's as simple as like the age and the size, bedrooms and bathrooms, square footage, where it's located, zip code, and so forth. So, but we had, Kansas City is a pretty good sized city, and, we were buying a lot of properties. So we had a pretty large buy box, but it was an average, price point was in the, well, in 2015-16, it was, we could pretty much meet that 1%, $100,000 house, $1,000 rent. But over the last, 5-6 years, literally started to become like 200,000 and 100, 1,500 rent or 1,200 rent. And so it became a lot more complicated to make those work.
Yeah, a little more challenging on the cash flow side, especially if you have property management. And then also factoring in on turnkeys, you've got to factor in vacancies and maintenance and all of that stuff. Did they have a formula, the property manager, or maybe your company had a formula, but did someone have a formula for figuring that out, or like a percentage, vacancies, maintenance, and those sorts of things?
Yeah, we would typically just put in like 5% vacancy, 5% maintenance, so about 10%. But everyone's different, and every deal is different. But and the other thing that I found too that was a bit of a struggle is, if somebody had like a worse performance than that, then they would be frustrated with us. If they had a better performance than that, we would never hear about it. So but I think the way I like to think about it, and the way I do it personally for myself, is, people get obsessed about cash flow. Cash flow is great, and it's a great tool, but it's not the only tool. And I talk about this in my, coaching, my meetup as well, which is, cash flow is great to help those things, be sustainable. But I've made way more money in, either refinancing and taking cash out tax-free, or, selling and transitioning into a larger portfolio, whatever. So making sure that we don't just let cash flow be the only or primary driver, and instead making sure we look at what that wealth over time and tax-free income from cash out refinances and so forth.
So you mentioned that Airbnbs. Are you doing Airbnbs today?
Yep. I think I have somewhere between 15 and 20. I'm not exactly sure at the moment, but we've spent quite a bit of time, and I've probably sold another 5 or 10 of them over the years that we've owned and had. So yeah, I've quite a bit of experience, I guess you could say, with them.
Yeah. What do you see as the pluses and the minuses on Airbnbs?
Well, the biggest minus I would say right now is understanding where it's legal, where it's not
Yeah.
legal, and the types of things that are allowed.
Mhm.
And, even for us, where we have experience, I have great partner and property manager in that space. And we've had some surprises even this year, dealing with both a city as well as a little neighborhood association that, wanted to try to throw us around. So it's really important to understand in the Airbnb space and like what a furnished rental actually is, and who's your actual guest, who's your end user on that. And, we've had a lot of success both as a short-term rental and midterm rental, which, then you're able to actually still have a lease in place, and you can meet a lot of the guidelines that, most cities, a neighborhood association, so forth. But we don't mess around with that. And I just really focus on, it's easy to just go buy a house, but I really want to look at that max leverage between a great house, great experience, and a much higher revenue opportunity than like a short-term rental. So if it's, the delta is only a couple $100 a month, I don't want to hold that as a short-term rental, because the vacancy and management of that's more time and capital intensive. I want to have a 10 or a 20 or a 30 or a 50x on what my cash flow out of that thing would be, so that it's way more worth my time and effort.
Yeah, it's been my experience from people that are ramping up their both the midterm rentals and Airbnbs. Most of them are kind of doing an either or model, but they're getting really well above average rents for those, even when factoring in things like vacancies. But it all seems to start with choosing the property, and knowing clearly who is the person that you want to come and rent this property. So I know someone that does Airbnbs and midterm rentals. He's near a naval base, and he knows that what the schedule is for those, folks in the Navy. They're going to come in, they're going to be home for a month, and this is going to happen, and this is going to happen. So he knows his avatar very well, and he does very well. But I think, some areas you can do, like maybe there's something like a naval base, and you understand that. Other areas, I know someone that does luxury short-term rentals, and that's a very vacation good. In my mind, it's a very good economy-driven type of situation. In Louisville, Kentucky, with our population, I think they're like event Airbnbs. They're conventions, or they're weddings, or while we have our fair share of midterm rentals with nurses, and we have a lot of medical stuff here. We have all of those, but if you've got to know your areas, and you've got to know who is it you're trying to attract, and then what happens if it is vacant. I know during COVID, a friend of mine had a really, really more upscale Airbnb that obviously during COVID in the beginning, no one was traveling. But when I asked him about it at the end of the year, he said we were at 20% occupancy, but we broke even on the what we owed, because he had bought it smart, renovated it smart, and he had put all the amenities in it to attract a certain level of clientele. And he said for him, that was a win-win. He said after about 8 or 9 months, then it started renting again. But that was, he said, I didn't lose any money. I didn't make any money, but we were able to pay the mortgage and do all of that.
Well, that's a blessing. I definitely, I look at that for sure. And whether you're buying a turnkey rental or a, Airbnb or whatever, definitely having, cash in reserves as well is just critically important that we do that, just as a responsibility as an investor, I believe is true. But, we definitely look at those types of Airbnbs, location, and then also just how is it laid out, and how does it photograph, and then how do you ensure a guest experience that is
Mm-hmm.
worthy of that person staying there, and they enjoy it, and they like the place, and they get what their expectation, meet or exceed their
Mm-hmm.
expectations. So
Exactly.
I also, I'm really a proponent of the luxury Airbnb. The most of the ones I acquired last year were all in that space.
Mm-hmm.
Um, we have four, well, four were put into service, and one more is almost finished. And so it's like $2.2 million worth of real estate,
Mm-hmm.
and like 470,000 worth of gross revenue in 12
Mm-hmm.
months.
Yeah.
So, that's a significant amount of revenue
Mm-hmm.
off of just 5 units,
Yeah, that is a lot. So what are you up to today? You mentioned that you're doing some development and some different things. Tell me a little bit about that.
Yep. So really focus more and more on how can we leverage the relationships that we have, not in like a negative way, but like what's our greatest opportunity with our greatest result for both us and anybody we work with. And so we raised a fund. So we have around $4 million in our development fund. It's a debt fund. And then we've been able to help get in and out of deals. So we've done our first 99 lot horizontal development. So we did that last year, and we have a couple other projects in the works as far as other larger developments, both horizontal and vertical. So we have some duplex projects, and we have a larger multifamily project, and we have another development, just horizontal happening in the works right now too. So it was way more fun to me to do a handful of projects that result in the same or better financial result than flipping 150 houses a year.
Yeah. Yeah. Much easier, right?
Much easier. And it's funny, people talk about this, but a lot of times it's easier, or it feels like an anathema, or that it shouldn't be true, but it's sometimes it's easier to actually get financing on a $5 or $10 or $15 million project than it is on a $200,000 project.
Yeah.
So it really is, it's interesting as you start to work on those.
Yeah. Funny how that works out, isn't it?
It is.
So tell everybody a little bit about your book.
Yep. So I'm a passionate reader. I think, it's amazing to me. We can literally go anywhere and learn anything we want. And for 10, 20 bucks, you can literally get a book and learn something. And so books have been such a big impact for me, and part of my learning and my journey and growth as a person, as an investor, as a man, all these things. So I really wanted to write a book, but I wanted to write one that wasn't just a real estate book, but it was a book that took you from like, if only I could, to actually creating a vision around your life. Because I think most people get into real estate and all they see is like dollar signs, and they think, I have to hustle and grind, and I have to, work this relentlessly over and over and over. And without having an actual vision and purpose beyond that too. And I think that's part of what really actual success is. And that the end of the title is, it's No Quitter's Guide to Crushing Real Estate Investing and Building an Extraordinary Life. So not just building a business that makes money, but building a life that you love and doing what you love. And so that was really critically important to me.
Well, I'll be sure and put links. Can they get that on Amazon? Is that?
Yeah, you can get it on Amazon, Barnes & Noble, Books A Million. You can get it anywhere books are sold. And it just published on the 10th, and excited to have it out and people getting to read it and getting some awesome feedback with it. And so, yeah, that'd be fantastic.
Okay. Yeah, I'll be sure to put links to all of Nathan's social media, his website, his books, to all of his things. I'll put everything in the show notes. Before we finish up here today, Nathan, do you have any final advice for people around real estate? Do's, don'ts, try things, bullets they can dodge?
Yeah, absolutely. I have a couple things, I kind of in the spirit of that, creating your extraordinary life. I think it's really important that people, they don't just think about real estate as a tool, but they think about money and real estate as a tool. And not that's not the end result. The end result is the experience and the time that they get from doing that activity. And, working is important, and working hard is important. And I think it's critical that we pick one lane to start. And because it's so easy when people are trying to figure out where to go, is like, okay, what are you waking up thinking about? What are you going to sleep thinking about? What comes up over and over for you that is exciting? Because at some point, it's not going to be exciting. It's going to be hard. You're going to have to persevere through problems and challenges. You've been in business since what, 1998? Like, you have overcome obstacles over and over, right, Sharon? And anybody who's been in this business, for me, it's since 2007. Been through multiple market cycles now. I've had challenges. I've gotten my teeth kicked in. I've lost a bunch of money. I've made 7 figures in deals. These things happen, right? And it happens over time, but we have to start in one place with one concept and work on that and get great at it. And then we can, go through other things from that. But I think it's so critical to find one and dig into it and get great at it. Automate it, let it run, and then we can chase after other things past that.
Yeah, I'm a big proponent in mastery. Master the one thing, and then move, like you said, move on if you want, grow your business. But you don't want to be just okay at a whole bunch of things.
Yes.
Yeah. Well, Nathan, thanks so much for coming on the show today. What's the best way for folks to get in touch with you?
Absolutely. So you can find a link to the book at noquittersguide.com. And then all my handles are the same at Nathan Brooks, REI. So you can track me down that way, Instagram, Facebook, LinkedIn, and so forth. So I'd love to connect that way.
Okay. Well, thanks again. And thanks to all the listeners for coming out today. And if you love this show, and I know you did, please leave us a rating and a review, and please share it. I would really appreciate it. And I will see all of you same time, same place next week. Bye for now.